The market has not been easy lately, guys. I know with the tariffs, with the volatility, with all these gaps, we're leaving relative equal lows. It's been hard. You've probably been going into the day really unsure of where we're going to end up in terms of draw and liquidity. But I'm going to give you guys a simple way to find where we're going to go every single day. You can use this whether you're certain, like whether things are clear or not. You can use this. When things aren't clear, and when I don't just look at look at the chart and immediately know where we're going to go, this is what I do. Obviously, there's some days where it's just super obvious. This is for the days where it's not obvious, where you're struggling. I know finding drawing liquidity is gonna be hard, but it's really the most important thing in trading. Like if you can find the right drawing liquidity, I really truly believe that your entry model is not that important, and you can really make any entry model work if you know to find the drawing liquidity with some amount of probability. You don't have to get it every day. I'm not saying this is a one size fits all. You're gonna find it every single day, but this is a probable way to find it. I'll say that. Like, you're going to find it more often than not. It's going to simplify things when you're struggling, when you aren't really sure where we're going to go. Um, you just want to simplify it. And I'm going to use, I believe, so we didn't have any trading on Friday. It was a holiday, so I'm going to use Thursday as an example because I used this method on Thursday to catch a winning trade that I think is a really good example of how to do it. So starting off, I just want to say, guys, if you're struggling in this market, be nice to yourself. Don't be afraid to go back to demo, paper trade a little bit. This is a hard market to trade. No one said trading was going to be easy. So many people fail, and the tariffs, the volatility, just how things have been lately have not been making it any easier. Be nice to yourself. Be grateful of how far you've come. Like, don't beat yourself up. As long as you're improving, as long as you're putting in the work, like it will pay off. Trading is such a rewarding skill, and yeah, as long as you're developing these market conditions, like they won't last forever. But let's go into the method that I use when I'm not really sure where we're gonna end up. I call it if-then statements. Okay, so I'm gonna show you what I mean. And shout out Adonomics, by the way. He calls it range conditions. And he talks about it only in terms of fair value gaps. It doesn't have to be fair value gaps, but I did learn a lot of this from him in his daily bias video. I thought it was really helpful. But I kind of reframed it in a way that I use every day, and I mean, really, that's what you should be doing, guys. Like, you don't have to be coming up with your own concepts and all that. Just take what people teach and figure out how it fits into your thinking. We all have our own way of thinking of things, and if something isn't aligning with that, just don't worry about it. Like breakers, for example, I never really understood breakers, so I kind of just moved on from them. I didn't mean to just click breaker right there. This is the Asia low, but yeah, take other people's teachings and kind of just make them into something that you can understand. That's exactly what I did here. And I'm going to show you guys this method. It is really simple, honestly. So right here, we had this 15-minute fair value gap. So the main thing here, you should be doing this regardless. This isn't the method, but you need to be staying on the high time frames. High time frame is always key. Low time frame is just for entries. But we had this here. So going to open like right here. Obviously, we had this low here. Obviously, that's going to get ran. But my main concern is whether we're going to run this high, the London high right here, or the Asia low. And I'm going to show you guys exactly how, through very simple steps, through just making if-then statements, meaning if this happens, then I do this, and if this doesn't happen, then I don't do that, things like that. I figured out the daily bias in order to then go on and take a low time frame entry model that did end up playing out for a winning trade. So obviously, these are relative equal highs right here with this. We have relative equal lows down here. Where are we going to go? Like it's kind of hard in situations like this. Um, I was actually leaning towards bullish just because we had more relative equal highs above this, whereas this was just this big imbalance. But I was able to take a winning short using this strategy, and that is I identified a condition. So right here we have this 5-minute fair value gap. I marked this out, and I said to myself, if we inverse this, I will be bullish. If we inverse this, then I will be bullish. Okay. So then, once we respect it, right? Like, had we inversed it here, right here, obviously, this is another thing. Inversing it by a tick, like, guys, that doesn't matter. Look for actual displacement. But yeah, if we inverse this, then I will be bullish. Simple. I have a piece of paper in front of me when I trade. I write it down. Once you write it down, you have to stick to it. It like, I feel like a big issue that I used to make in my trading was that I would analyze with the execution in mind. And like when you're analyzing with the execution in mind, meaning like you almost want to take a trade. So you almost change your analysis in order to make it so that you can take a trade. You know what I mean? Like you sort of like say like, oh, right here, you know, yeah, we didn't inverse that, but oh, we have this 1 minute change of state delivery. No, write it down, analyze with a clear mind without any executions in mind. Write down what you're gonna do, okay? And that is, if we invert this, I'm gonna be bullish. Then the flip side of that is, if we respect it, then I'm gonna be bearish. And then just stick to it. You have to stick to it. You can't just write that down and then be like, oh, I want to take a long. No, analyze without any executions in mind. Analyze with a very clear mind, thinking logically, okay, and actually write it down. Write down, if this happens, then I will do that. So right here, I wrote it down. I mean, I actually don't have my notebook on me. I'd show you guys if I did, but I wrote down, if we invert that 5-minute fair value, yeah, I'm gonna be bullish. Once we respected it, then I was like, okay, we're probably gonna be bearish. Let me do the same thing on a lower time frame, right? Because we could, disrespect that, come down here, come into the order block, whatever, and then go disrespect the 5-minute bearish fair value gap. So then you set another low time frame condition, and I wrote it down again with a clear mind, not thinking about the executions, because once like you can force things, don't force things. Like when you're only thinking about how can I enter, then you're gonna like sort of create things that aren't actually real in your mind to sort of make it so that you can trade. Like if you want to take a trade, trust me, you will find a trade, even if there's not one there. That's a huge mistake I see so many traders making. That's a huge mistake I still struggle with, honestly, is just coming up with trades because I want to take a trade, not because there's an actual plus setup. But so then after we do that, I wrote it down. Then I'm gonna be bullish. So if we respect it, then I'm gonna be bearish. So now I have to be bearish. I do the same thing. I find this 1 minute fair value gap. I say if we respect it, then I'm gonna wait again for this condition. Then go back to that. And if we invert the 5-minute fair value gap to the upside, then I'll be bullish. But if we disrespect this 1 minute fair value gap, then what do we have? We're respecting the high time frame key level up here, the 15-minute fair value gap that I showed you at the start. We are respecting the 5-minute fair value gap and we've been given a chance to disrespect it and invert it. We did not. And we're disrespecting this low time frame PD array. Boom, you're bearish, draws Asia low. Right there, we invert that. I entered on the retrace, and my stop was around right here. Nice little 1.2R. Beautiful. And I did that by just writing simple conditional statements. I'm telling you guys, simple conditional statements can completely change your trading because it goes from thinking, all right, well, what do I think it's going to do? No, wait for the market to tell you what it's going to do. All you have to do is set your conditions, say, all right, if we respect this, we're going to be bearish. If we disrespect it, we're going to be bullish. And then drop down to lower time frames as you go, right? Like I started, technically, even just my original idea here, had we disrespected this, then I wouldn't have been bearish. So this in itself is a condition as well. And then you drop down to lower time frames as you go. And this can, like, starting off here, I was completely 50-50. I was like, we could be bullish, we could be bearish. But I set these statements. I say what I'm going to do, depending on how they're respected, or if they're respected. And then I stick to it. And it's very simple. It's very logical. I almost think of it as like mechanical in a way. but you're using your own bias, you're using your own thought process. So it's not really mechanical, but you sort of turn discretionary trading into a mechanical system because if you're just discretionary trading, like you know this big up candle here, I'm sure everyone was like, oh, I think it's gonna go higher, but like you don't really have a reason for it. You know what I mean? You can't be taking trades without logical explanations and narrative and bias behind them. Um, so yeah, just set those range conditions and really stick to them. Make those logical statements, and it really simplifies things. It makes it so that you aren't guessing. Like a lot of people, it's not really clear, but they want to take a trade, so they kind of guess. They're like, "Oh, we ran this. Let me go long." Whatever. Like they force things because they want to trade. That's goes back to what I was saying earlier. They want to take a trade. Whereas if you use what the market is giving you, use the data, you can find an edge. You can use, we're respecting this, we're disrespecting this. You know that those should be respected if we're being bullish, and certain PDRA should be disrespected if we're bearish. And you can use that to, not every single time, this isn't 100% win rate. Anyone that claims 100% win rate, they're lying. But with some probability, meaning this happens more often than not, you can use that to build like a probabilistic draw on liquidity. Like it's more than likely going to go here. And that's what I did. I executed on it without fear. I executed on it because I set those statements, I wrote them down, and then I just stuck to them. It's very simple, it's very mechanical, it's very calculated, it's very logical. And yeah, I really think this can help a lot of people. If you guys want to talk to me, ask me any questions, you can join my free Discord. Link will be in the description. Comment any videos you guys want me to make. Make a video on pretty much anything you guys are struggling with. I love helping people in trading. And yeah, you can join my Discord, talk to me, ask me any questions. Let me know what you guys are struggling with. And again, like I was saying, guys, these markets aren't easy. Keep grinding, keep staying disciplined. Don't force things. Simplify things. Really, really make it so that you have reasoning behind your trade. Don't just take trades because you want to take a trade. And I really hope this helps someone out there because like this has helped me a lot. It's just a really beneficial way to find your own liquidity.